Good morning, everyone. Hope y'all are having a good day. Jump into a little bit of pre-market prep here for Wednesday, January 20th. So, big story here this morning. Netflix absolutely exploding this morning after earnings. So the expected move for Netflix was just about $30. This bad Larry is going to open up to the tune of a good $70-80 higher. So a big move here for Netflix, and we would wonder, does that spark a little bit of a pre-earnings run here for the other FANG stocks? So Amazon is gapping up nicely this morning. The old book of face is doing the same thing. You got your Microsoft, you got your Apple, and then Google, who had just a killer move yesterday with this pretty damn good looking daily squeeze, could be poised to fire the squeeze here over the next few days, next week or so. Keep in mind, earnings is right around the corner. So I think Google's an interesting setup, a good looking squeeze. We have our stack moving averages, bullish momentum hit in the histogram. So what I like to do here is look for some lower time frame squeezes. And it doesn't look like this morning we got anything to work with. So, I like the big explosive day one, and then we go into the second day here in a nice tight 30-minute, hourly, 2-hour squeeze. It can make gauging a nice entry relatively easy, but it looks like we got no squeezes here. So what I'm wondering is, let's see, 21 EMA right around 1750. Earnings is on the 2nd. So if we get looking at the chain here, we could go to next week's expiration. And if we're looking for this daily squeeze to get going with my style of trading the put credit spread, what kind of risk reward is we working with here? So ideally, we'd like to be at or under the 21 EMA. So 1750 by 1745 looks like you get about $1.65 a credit, and on a 10 contract basis, close to a 2-to-1 risk reward ratio. So on any dip here this morning, that might be something I'm interested in. Confident the daily squeeze could fire to the upside here over the next week or so into earnings. And if, personally, you're confident of that potential move, you're kind of selling a put credit spread under the 21. And at that point, you're not even really banking on it making the move in your favor, rather just simply holding above the 21. So you put a little bit of edge in your favor, probabilities in your favor. So something to keep an eye on for Google. And it is nice to see Netflix here because we do got the positions in Amazon. So let's take a trip on down. All right, so got the put credit spread on Amazon. This expires in next Friday, and I'm out here at 30.50 by 30.40. So any kind of action we get here today, and if we could get back towards that daily 21 EMA, which we're tapping off of here this morning, suddenly that put credit spread that expires next Friday looks pretty damn good. So patience might just pay off here with the Amazon swing. Pretty much just been collecting dust, sitting on that thing for what feels like a month or maybe a month and a half here. NVIDIA, we got the swing position there, taking a look. Not much going on this morning. I would love to see NVIDIA close back above the daily 21 EMA. That would be a nice solid end to the week, and that would put our put credit spreads, I think, in a pretty good position to start bringing in some nice premium. So we got January 29th expiration, and then you got February 5th expiration. Couple different sets right there. So Amazon, NVIDIA, and then you got pins. So pins was pretty sloppy yesterday, but it did hold up relatively well over the 21 EMA. And if we can take a peek this morning, it does look like we're pushing just a little bit. So with pins, I got the put credit spreads with the short strikes all underneath that 21 EMA from the daily chart. So these expire next Friday as well. 69, I sold some of those. I sold some 66.5, sold some 66, selling everything underneath that 21. So would love to see pins get some follow through here this week. So the Amazon, the pins, the NVIDIA, those positions are looking pretty solid here, especially if we can get a little bit of that pre-earnings pump after Netflix is smashing it here. For Tesla, came into yesterday's session with the Iron Condor that we placed in the simpler options room on Friday, took that off very early in the session for about 50% of its max profit. So a nice little paycheck just for holding over the weekend. And now looking at Tesla this morning, let's get looking for a couple of lower time frame squeezes. So you got an hourly squeeze trying to fire off here. We got a good looking 2-hour squeeze trying to fire as well. And if we could kind of clear that 865 level, she could get pumping. Let's see if we got a 4-hour. And there's the big mom of the 4-hour squeeze. So let's see. Bottom Bollinger Band on the 4-hour is down around 820. So for potential kind of into the end of week trade here, looking to play those squeezes, could we sell the 820s? Maybe buy the 810s. You're getting 235 a credit. Not the worst risk reward in the world. Let's see if we were to just go $5 wide, 820 by 815, $1.27 a credit. Yeah, you know what? Not a terrible risk reward. Kind of in that 3 to 1-ish neighborhood. So that might be interesting as well. If you're confident the 4-hour squeeze can fire to the upside, you go with the weekly put credit spread, selling that short strike right underneath the bottom Bollinger Band. At that point, you're basically placing a bet that the squeeze isn't going to fire in the opposite direction. So that might be interesting on any dip we get here today. And then my other position, guys, is the hedge on the Qs. Got all these long positions, needed a little bit of protection. And I'm laughing here this morning. Who shorts the market, right? Why the hell do we hedge? All this market does is pull back to the 21 and then rally, and pull back to the 21 and rally, and pull back to the 21 and rally. So what the hell's the point of hedging, right? Now, I say that jokingly. You do want to have that protection, right? Just for peace of mind's sake in an extended market when everyone's leaning to the upside. To me, I just sleep a little bit better at night. So obviously it is looking like, hey, maybe you didn't need the hedge here. So I have to manage this position actively, but my whole mindset is if the market does rip to brand new all-time highs and keeps on running through my short strike at 13,200, Amazon, Nvidia, pins, if they can get something going here, I'm going to make way more on those positions than I could potentially lose on the call credit spread. So everything should balance itself out. But I wish you guys the best of luck. I'm going to wrap it up here 30 minutes before the open. For those of you in the simpler group, I will see y'all at 10:30 a.m. Eastern. And if you'd like to join with a nice free trial, link in the description of the video. Talk to you soon.